In this video I'm going to show you how Navision posts to the chart of accounts when you sell your items before you know the actual cost of them, or in other words, when you sell before buying. But before you watch this video, I strongly recommend you watch the basic scenario video, which will take you over the basic scenario postings. But first I'll go over all the postings on a number of slides. The first slide will be a receiving slide, the next slide will be a ship and invoice slide, and the third and final one will be a purchase invoice slide. This should give you a complete understanding of the bookkeeping and accounting side and why Navision posts as it does. When you have a full understanding of why Navision posts as it does, I will first show you how to set up Navision to perform this demonstration, and then I will create a purchase order which I will receive. Then I will create a sales order which I will ship an invoice, and finally I will go back to the purchase order and invoice it. I will also have a look at all the transactions and the documents created from these actions. So in this case of selling before buying, the flow is that we create a purchase order of one item which we will receive at an expected cost of 8. We then go, without invoicing it, we go to the sales, to a sales order which we both ship and invoice. And then we go back to the purchase order and we haven't received the invoice from our vendor. So we don't know what value to put it on inventory at. In fact, we don't know the value until after we have sold the item, which is of course a problem because it will also work if you have expected cost posting switched on, but it's easier to have it switched off because then we won't get too many entries. So for the first step, when we go to the purchase order, put in the line and receive it, the item. If expected cost had been switched on, we would have gotten some financial impact. So the next step to do here is to go and ship and invoice the item from a sales order, and this creates 5 GL entries. So these 5 here. A reduction in inventory of 8, and our cost of goods sold is also 8. So on this last slide we finally received the invoice from our vendor, and it turns out that the item we bought and the item that we initially thought would those into two different colors. So the first one, let's start with the green one here. The first ones, all those that are indicated with green, could be considered a normal purchase transaction. So we know now that our inventory, or the item that we're putting on inventory, should be put on inventory at a cost of $10. We've also had on top of this normal purchase transaction, those 5 normal purchase transactions entries, is that Navision has created 2 additional GL entries, and this is to increase both the inventory, so you could consider these 2 as 1, making up a total of 10. So in fact, it has updated our previous the GL entries that was done made a total profit of 10, because we have increased the value of the goods sold from 8 to a total of 10. And this increase in cost of goods sold is also recorded on the inventory, so that when we look at this as a whole, it looks like we have bought items and we put those items invoice. But here you do it the other way around. You receive and then you skip to the end of an or otherwise normal chain, and then you go back to the purchase again. Okay, so let's first have a look at how Navision is set up in order to perform this demonstration. The first thing we can look at is the chart of accounts. And in the bottom here, I have made a mini chart of accounts which is identical to the one that I used in the slides. So you need to set up all these accounts just as they are here. The next thing we can have a look at is the inventory setup. And I have set automatic cost posting to yes. Expected cost posting should be switched off. As a matter of fact, you can run this exercise with expected cost posting switched on, but it will create extra transactions, so I recommend you switch it your inventory posting groups. I have created an inventory posting group just called inv p, inventory p here, and all you need to set up is the inventory account as this. Then we need to set up the vendor posting groups. And I have created just a vendor posting group called vendor, and you just need to set up your payables account here to point to your payables account in your mini chart of accounts. And the last thing you need to be aware of is your customer posting groups. And I Okay, so before we get started, I suggest you just switch the workday to a day where you know you don't have any transaction for this particular item. So I'm gonna do that here. And the first thing we need to do is to go to a purchase order and create a new purchase order. And we need the purchase. Just as on the slide. So the next thing we need to do is to create a sales order. And we'll create a new one. And also this one should be created for the item class 2. And we should sell it from location blank and in one quantity. We want to sell it for $20 before tax. So we both ship and invoice this one like this. And we can then go and look at the posted sales shipment. which I've hidden back here. And now we are getting, maybe a couple of days or maybe a week later or maybe a month later, we are getting the actual invoice. And it's not until now that we know what the glass actually cost us. So it turns out from looking at the invoice that the vendor wants us to pay $10 instead of $8. So we'll have to just reopen this one in order to modify the data. So we'll change this to 10. Just for the principle, obviously we could also receive an invoice where the price is less. Maybe the vendor has decided to give us a discount based on the quantity of goods we're buying from him, or maybe there's some other reason for why the cost of the good is not exactly what we expect. And it has created 7 inches, but 5 of them are found here. So you have your purchase transaction here, and you have the 2 transactions that are responsible for moving the cost from the moving the cost from the cost section into the inventory. And the last 2 entries or GL entries it has created cannot be found here. It needs to be found from the sales invoice, the posted sales invoice, which a moment ago had only 5 entries connected to it. But if we find it now, and if we navigate, we'll see that now it doesn't have 5 GL entries as it did before we posted the purchase order. Now it has 7. So of the purchase order, it created 7 entries, and you will be able to recognize these 2 as the adjustments for the true cost of the good, the true cost of goods sold, and the true reduction in inventory. So that wraps it up for the case of selling before buying.